Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so the first thing I want to point out on the daily chart is, for the first time really since we were at the highs back in late February, you can start to see the two yellow lines here, the Bollinger Bands, are starting to get tight. And that's a byproduct of this consolidation that we've been sitting in now for, darn near a month, okay? And it's about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 20. It's back here is 20 sessions. Well, the Bollinger Bands are 20 periods. So they've consolidated now, and to the extent they continue to consolidate, you're going to see compression followed by expansion. In what direction? I don't know. And you know what? Neither does anybody else. But, we can take a look at things and see who's got the advantage now. Now remember, go back to Friday night. I did the week in review video where I talked about how the bears being able to reject price up at the 200-day, 100-day, 50-day, weekly exponential moving averages gave them the advantage coming into the week. And that all suggested a move down to the daily midband, which is your green line. Now, here's Monday, and they did that, okay? Over to the hourly chart. But that's when the trouble started for the bears. We spend the whole day chopping like crazy down there, and it becomes support. So now, what are you seeing? You're seeing a series of higher lows here, and again last night here. Followed by some higher highs, and we don't know what this is going to do yet, but if it's a higher high, then it's yet another conversion of the 9-day, weekly pivot, hourly midband, which held here and here. They dipped below it here, but they got it back. So until the bears start to convert key areas and keep them converted, we will continue to be inside that baseline strategy that we talked about yesterday morning, that by holding the daily midband, the S&P is a buy dips environment, not a sell rallies environment. You can trade the short side from time to time, but you're going to do a lot better concentrating on buying those dips. So we're trading 82 quarter. They tried to take it down. They didn't look good last night around the 44. They do 47, 44 area down here. 43 half they printed. Then they blew it. They blew it all at 50, 55, 56. So we had a short on that we were late, and we ended up taking a -5 on the whip up into 57, and then we put out a long setup with a risk marker of 55 and an entry area of 57 or better. And the low print after that was 55 quarters. So for those who were awake and around and wanted to do it, it was a nice long trade. But the point being, when the bears blow these areas, you've got to recognize it. You've got to accept it. You have to get the bus moving in the other direction, because that's where the handles are. I mean, the 55 marker was basically no heat. I didn't think it was going to be no heat to this extent, but nothing really surprises me anymore about how badly the bears can give up 10, 20, or 30 handles in one direction in a very short period of time. As we head into today, we have to keep an eye on the 28.65 to 28.70 area. You've got the hourly midband, the 9-day, and the weekly basically are in lockstep today at 29.65. If you can take out yesterday's high, in this area of 89 quarter, 89.75, basically if you can break 90 and hold it, then the 2900 area is going to magnetize, and the question becomes at that point, does it move efficiently through 2900, or are we going to chop around 2900 for a while? I could see either way. Price will tell us what it wants to do. if it moves pretty efficiently through 2,900, then I'll go back to what I said a minute ago. Fighting price is not going to be fun, and you'll find a lot more handles and a lot more, and a lot less heat continuing to buy dips until the bears can show us that they can convert. I mean, it doesn't have to be a bunch of lines. Start off with one. Convert one line that matters and hold it. Go ahead. Because if you look at that chart right there, they have converted exactly none this week. 0 lines that matter and hold it. And as long as that's the case, it's buy dips. So for the open today, 5-minute mids at 82, that hourly mids at 71, volume weighted average price at 69, proprietary moving average is at 79. I wouldn't be surprised if that stuff got tested, and I would be very surprised if it wasn't defended in the morning. So everybody have a great day. Be safe, be healthy, take care, trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.